All right, we are here to talk about buying turnkey rental properties versus non-turnkey rental properties. If you have clicked on this video, I'm assuming that you already know what a turnkey rental property is, or you probably won't be very interested. But in case you stumbled across this video, don't leave. But go check out the video I'll link below that is literally called "What is a Turnkey Rental Property?" So you can make sure that you know exactly what we're referring to when we're talking about should you invest in turnkeys versus not turnkeys. One of the things I'm so excited about doing this video about is because we have Scott Saunders here, and Scott and I have done a couple of videos together previously. And every time I talk to Scott, I learned something. I've been in this industry a good long while, and yet I still learn things. Scott has some major, what I would call, if I were to flatter you a little, some major expertise in some really critical, crucial areas of real estate investing, but specifically rental property investing. And I'm going to link to those videos that Scott and I have done before. If you're interested in 1031 exchanges, there's one on that, and also one on cost segregation. And if you don't know what that term means, you definitely want to, because it could mean a lot of money in your pocket. So definitely check out Scott and I's previous videos. Scott, I want to welcome you here today to talk about your experience as a what do we call you? A large portfolio property owner, having invested both in turnkeys and non-turnkeys. And we're going to let you kind of share your experience. I'll just let you say a quick hello, introduce yourself, and then I'll dive into a little bit about turnkeys, the things we're thinking about, considering, what we're going to talk about with them.
Well, Allie, it's great to be with you this afternoon. I'm really looking forward to this topic. And, I've chatted a little bit about it. I think it's really a relevant one. It's a question that comes up with a lot of investors. So we're going to kind of flush it out, talk about some different aspects of it. It's going to be a lot of fun. So great to be with you today.
Yeah, thanks for coming on. And what I'm really excited that I want you guys who are listening to the video to take away is there, to me in life, and this is applicable across the board, I can hear certain things on paper and I can hear reasons for certain things, but sometimes the practical application, actual day in the life is, I don't want to say it's different, but I don't grasp it or I don't understand it. So I can believe what people tell me, but if I don't have the firsthand experience, I don't get it. So what I'm really excited about is we're going to briefly hit on what are people's opposition to turnkeys when we hear them. And, what has your actual experience been? Because you have a portfolio of over 55 properties. I don't even know how many you have at this point. I know it's more than 55. And having bought both turnkey and non-turnkey, like I said, you have that practical application, real world experience. What are the pros and cons of each? What happened with your properties, turnkey versus non-turnkey? So that's what I'm really wanting to bring forward for people, is that practical, real life understanding, not just what people tell you is going to happen or is the case or whatever. So,
yeah, I'll tell you, I look forward to doing that. I can share some of my experiences, some good, some bad. And if some of your listeners, if they can listen to what we're talking about and learn, they can accelerate their own investing. So, if there's just a principle, which is you want to follow people, they're just a few steps ahead of you. You don't need to follow, the ultra big dogs in the investment world, but people that are a few steps ahead. Learn from what we've gone through. I made a lot of mistakes. Some things have gone well. And so I'm happy to just share those. And I hope people go, oh, I learned what to do and maybe what not to do, or at least they've heard my experience. They go, okay, I hadn't thought of that before. Maybe I should consider that moving forward. So
I love that. You're more closely relatable than, a lot of us listen to Robert Kiyosaki or Warren Buffett or any of those guys. And it's like, cool, I can read what they say in books, but also how does that apply to the little guys? And you, in my opinion, are ahead of the little guys, but you're, like you said, you're close enough where people can actually follow in your footsteps, and you're doing things, you've learned lessons, you've had successes, you've had things that bombed out. Why not learn from that, straight from the horse's mouth? So I'm super excited. On that note, I kind of want to start out by saying, what are the oppositions to turnkeys? And I will give the example of BiggerPockets, the website. If you guys aren't familiar with BiggerPockets, it's, I'm assuming, the world's largest real estate investing website. I used to be a writer for BiggerPockets. BiggerPockets is really where a lot of people get their start. One interesting dynamic on BiggerPockets is, for whatever reason, a lot of people hate turnkeys. And so if you go on Bigger Pockets and you're around the forums enough, you'll hear a lot of people. If someone says, I'm considering investing in a turnkey, there's going to be so many responses that are like, oh my God, why would you do that? Like, you're just leaving money on the table. Why not just do the work yourself? And so what I want to start with are, what are those oppositions that people hear? We'll just talk about the things on paper right now. And me and Scott will both kind of chime in on this. And then, we talked about on paper versus like practical application. Let's put those into real life using Scott's experience of turnkey versus non-turnkey. So Scott, chime in. I will say that the first thing everybody says is, well, you're going to pay a premium price for a turnkey. You're going to pay more money. And the fact is, that is accurate. But it also is a get what you pay for. So if you're buying a distressed shack, of course you're going to pay a lot less. And if you're doing all the work to rehab it, you're going to pay less, but you're going to pay in other, what I call the other currencies, time, and in my case, sanity. There's other ways that you're going to pay for that difference. But Scott, what's your take on, this is the most famous, and people intermingle the word overpriced and premium. I want to clarify those. Overpriced is when something is priced above what it's worth. That's not what we're talking about here. We're talking about the premium upcharge to a turnkey because of what you're getting. What's your take on it, Scott?
My take, the way I look at that, the word I'd probably use is when you buy a turnkey, you're buying a property at retail. When a lot of people in Bigger Pockets and other forums look at things, they consider buying a property at wholesale price, getting a distressed property, putting in the sweat equity, and then they get that benefit in the gains. And one number, they fix it up, and now they're going to flip it out at retail. When you buy a turnkey, you're typically buying at a retail value, is what I would say. Now, the whole thing you have to look at is buying at retail. Is that a good or a bad thing? I buy a lot of turnkeys, and I've learned over time, I prefer that. There are a lot of benefits. So you mentioned something important. You go into it, you buy a property, you're forgetting all the time it takes to fix up and improve a property. What if you have very few skills? First of all, you've got to buy a good asset wholesale. If you haven't done that very often, it's hard to do that. The people that are doing turnkeys, they've got whole feeder campaigns where they're marketing whole areas with mailers and signs and all sorts of things. And they've got a good skill to get a really good purchase price. Not everybody as an investor is strong in negotiation to get that. Then you got to buy the asset. Then you got to fix it up. So you got to determine, what do I need to put into it? What's the right level of improvements? Again, if you haven't done that before, are you going to really know? Or are you going to be kind of tempted because maybe your partner or somebody you're working with says, oh, we need to make the kitchen really over the top, or the master bathroom's got to be fixed up, where, you don't really know where do you get where's the sweet spot? Where's the right price, price point? Now you got to fix it up. So you're going to spend weekends and evenings doing that, trying to get supplies. You're paying retail for your supplies. So you're a newbie. You're not getting any break on the products. When you buy a turnkey, a lot of times the people I work with, they're getting all of their materials and labor at more wholesale costs because they're doing volumes, right? They're doing 100 assets in a market. So they got a big pricing point where they can pass on some of those savings to me, the investor. If I'm a retail, I just go down to Home Depot or Lowe's, and I'm paying whatever their stuff costs. So now you got all your time involved. I value my time more than I value my real estate asset. If I had to put a premium on one, my time is worth a lot more to me personally than any one real estate. So I want to guard my time. And the last thing I want to be doing is messing around with a fix and flip. I'm not good at it. I suck. Yep. I can barely paint. I can barely change a light bulb, right? So I don't want to personally do that. And, I would guess some of the people in your audience, they may be able to do a little fix up here and there and, swap out a faucet in a bathroom. But when you're getting down to ripping out tile and putting in countertops, you're dealing with something that not all of us really do on a day-to-day basis unless we're in the construction trade. So right away, that's just something to consider. And that was
a couple of things I'll chime in on that. I was thinking, as you were saying, two things on my end is, if I choose, I'm also not good at fixing. I'm not handy. I can fortunately change a light bulb, but that's about as far as it goes. And I know a couple of things in my experience. You were talking about not getting wholesale discounted prices from Home Depot and Lowe's. Not only do I not get those discounts, I usually end up spending double, because when I go there the first time, I get everything wrong, but I use it just enough where I can't return it because I have no idea what I'm doing. So then I have to buy stuff all over again. So I'm actually almost paying more than double because I have no idea what I'm doing. And the second thing, I joke, I'm like, have you been a blonde girl trying to deal with contractors lately? Like, and this can probably happen to everyone, but the point being, have you dealt with contractors lately? Like, it can just be such a headache for me. More than what I value more than my time is my sanity. And I have had contractors. I just had one recently last summer. We had to gut a kitchen because of a water leak. These contractors almost put me in the nutty bin. I mean, it was almost like psychologically damaging trying to deal with these people. And so it's like, the way you described it is almost just as if everything goes correctly, what the downsides are. But if the contractor's bad or the contractor screws you, even on bigger pockets, I hear, they made the payments to the contractor up front, contractor disappears at some point, or the work is bad quality. And so to your time point, you're managing all of that and spending the associated costs that may come with bad contractor jobs, bad contractors, going to Home Depot 3 times instead of 1 time, that kind of stuff. So, the pitfalls can get deeper. And I want to come back to this because when we start talking about your real world experience, I think the realities of the risk when you start doing fix and flips yourself, that goes into that day-to-day thing. So I definitely want to dive more and more into that. And, the other major opposition I hear to turnkeys, well, actually, it's not another major opposition, but in relation to paying that market price, people are like, well, it's going to impact my cash flow too much, or it's going to impact my profits, because when you buy the distressed property, you're also building equity from the get-go. What's your counter to the point of what you're describing, but from the actual just financial standpoint? What's your response to people saying, well, my returns are impacted if I don't do all that work myself?
Well, of course, your return is going to be different, right? But you buy real estate not to nobody gets wealthy overnight in real estate.
Right.
It's a long-term process. You start to see the benefits over time as you get appreciation and bumps in rents and you pay down mortgage and all that, all the different benefits. So people build wealth in real estate over time. You're looking at 5-10 years. So when I buy an asset today, yes, I want some positive cash flow on it. But my solution would just be buy more assets, right? If I want a little more cash flow, then I want to focus my time on buying more assets. And people
versus going to Home Depot.
Versus Home Depot, right? So maybe you do it yourself. But you know what? Maybe you spend your time, instead of doing a fix and flip, maybe what you do is you network with some wealthy friends and you bring in partners. So if you're not someone that you're going to run out of capital, which happens sometimes when you're building a portfolio, bring in some other people, go in and co-invest, and now you can continue growing and scaling. So you're not really looking in year 1 to make a killing. The other one, and I don't think you touched upon it yet, when you look at a fix and flip, when you flip a property, you're holding it very short term. You're paying the very highest tax rate. So you're going to buy it and you're holding it less than a year. You want to flip it as fast as you can. Now you're paying the ordinary income rate. So you're in California, ordinary income 37 federal, your tax rate's 13.3% for the state, right? That's a big bite into your profit that you're paying out. So it's not what you made on the deal, it's what you keep. The other thing, just thinking out loud about California, not every market lends itself to a fix and flip. Where I buy is typically Midwestern type marketplaces. So homes that are 100 to 150. I'm in Colorado. The average home in Denver is about 600,000. You're in LA. It's probably what's your average price? 800 million?
I wish I could get a house here for 800.
Okay.
It varies all across LA, but 800 I would assume would be about the very minimum.
Okay, so call it $1 million.
Yeah.
Right now, we're doing this in January of 2023 when rates are kind of high. I know of people that are doing fix and flips that are getting slaughtered right now. Yeah. This is not a time when you can go into Los Angeles or Denver, buy an asset and flip it around, because by the time you do all that, we don't know what's going to happen in the market. So the other thing to consider is just geography. You might live in a more expensive area, California, Seattle, New York, a lot of states are very expensive. It doesn't make sense in a lot of markets to do a fix and flip. There's a high degree of risk and there's a high entry point to get into it. And what are you going to make at the end of the day? So that's just another factor that I think is super important to consider.
Well, and you bringing that up actually reminds me of something I wanted to say in the beginning of this video for people is I don't want anyone to think that we're telling everyone they should buy turnkey and not non-turnkey, that they should do all the work themselves, because there are absolutely people and situations where, you know what, if you have the resources, the time, and you're in the vicinity to be able to do this, I 100% think you should do the work yourself, for sure. Like, duh, don't pay the turnkey price. If you know, it's funny because I mostly help people buy turnkeys, and so occasionally somebody will come to me and they tell me their situation and they think they want to buy a turnkey, and I'm like, I don't think you should buy a turnkey. And they're like, isn't that what you sell? And I'm like, well, yeah, but that, you know, like I'm not the kind of person to sell you on something that I don't think is a fit, because if you have the resources, the ability, and the interest in doing the work yourself, 1000%, I think you should do that. So I don't want anyone to take this video to mean you should not buy, or you should only buy turnkey, because that's not the case. But, you know, Scott started really alluding to what are the reasons why somebody would consider a turnkey? Who are the turnkeys right for? And who are those people who may benefit more from a turnkey than they would doing all the work themselves? The point he just brought up, like I live in Los Angeles. I can't get cash flow to save my life here. And if I was doing fix and flips, it's astronomically expensive here. The entry price is hard. If I do hold the property as a rental property, it's an extremely tenant-friendly state. There are a million reasons not to invest in Los Angeles. So for me, I want to invest out of state. The minute I go out of state, I'm no longer local to the property. So instantaneously, for me to take on the work to do a non-turnkey house, it's a whole different boatload of things that I have to take on, and I'm not there. The risk is higher. It's just a different workload. So the first, you know, group of people would be the ones who don't live local to advantageous properties. So if you don't live local, you may want to consider turnkey. Just to, we'll kind of dive more in as Scott tells us the differences in his experiences, why you might want to buy a turnkey instead of non-turnkey. Another group of people would be, I've had people reach out to me. They work full-time jobs. They have a family of 5, and they say, hey, I think I want to wholesale. And I'm like, and my first response is, when? you know, like you
Right.
already work 40+ hours a week and you've got a family of 5. Do you have more hours in a day than I do? Because wholesaling, for example, and as would be with fixing and flipping, is a very active, you got to have some hours on the day for that. So if you already don't have any time, let's say you do live in a state where it would be kind of easy to do properties on your own, but you work more than full time and you have this family of 5 or more, or, you know, whatever you're doing, do you want to take on that work? The answer might be no. And then the third category, and I'll see if Scott has any additional categories. The third category in my mind is brand new investors. We're going to kind of dive into what can happen when you go outside of turnkey and you do all these things on your own. But just to kind of summarize, fixing and flipping and doing the rehabs yourself and buying those distressed properties, the people online and on Bigger Pockets and all those who are saying you should do it on your own, there's a big part that they're leaving out of that, which is the risk. They're making it sound like it's this easy, brainless, like, oh, well, on paper, duh, buy the distressed property, rehab the property, rent it out for, you know, it's now worth more than you put into it, and you rent it out. Well, that sounds gravy, but I cannot tell you how many properties that I have walked into with turnkey providers who are in the process of rehabbing properties. I walk in and I look around, half of the property is rehabbed completely and the other half is not. And I'm like, what happened? And it turns out that the turnkey provider got this property from some amateur fixer flipper who was like, I'm going to flip this property. They go in, they get half of it done, and then they run into all sorts of problems they don't know how to handle. And they have to offload the property at a complete loss. So it's great for the turnkey provider. He's like, sweet, half the rehab's already done. And now they get to do what they're experts at. So brand new investors, even if you have the time, even if you are in the location that's good for investing, it may be too much for you to take on, because the biggest thing I see in real estate is people just go flying off into the deep end with no floaties, no raft, no lifeguard, and they drown and they're like, gosh, I hate real estate. That's terrible. And they get out of it and never come back. Well, taking on that kind of project, can throw you into the deep end of the pool. So, Scott, do you have any other, for people, when the consideration comes up, turnkey versus non-turnkey, it means people have a choice. Who else would be in that category who is faced with, should I buy a turnkey or should I do it myself?
Well, I think what you brought up first off was a really important one, which is there's no one right way to do real estate, right?
Yeah.
There are a lot of different paths and there are different opportunities and depends upon your marketplace and your skill set. So keep that in mind, right? It depends upon that. We've all done it. I like to say, I have this phrase that a friend of mine says, which is get rich in a niche, which means you focus in on one thing, right? And you get really, really good at it. Now, I like single family. And I like turnkey single family. I like the cap rates. I like the returns. I like the demographics.
If you guys think Scott's exaggerating about how much he likes single family, yeah, I crack up. If he's gotten some duplex, was it recently or sometime recently you had a duplex? I can hear the change in his voice just talking about a duplex. Like, he's not a duplex dude. He likes single family so much that there's literally a difference in his voice talking about even a single family versus a duplex. It's hilarious.
That's funny. Well, so many people though, when you go to bigger pockets or if you get involved with your local real estate group, a lot of people, they're going to kind of think like you've got to get bigger and bigger, right? So you start with a single family and you go duplex, fourplex, eightplex. You got to go an apartment, you got to scale and you got to, well, that's true. And there's a path for that, but not everybody is a Grant Cardone who's going to scale and do syndications and do all of that. That's a whole different animal.
Yeah.
For the average investor, for when I see kind of the people in your community, single family to me is the gateway to building real estate wealth. It's accessible. They're all over the place. And we can go through all the reasons why turnkey single family are so good.
Like, ooh, I think I just got another video idea for us.
There you go. Why not stick with something that works and is effective and move forward? And so I always think people should build a portfolio of turnkey, get up to at least minimum 5. That's where it's kind of a sweet spot. And then maybe 10 or 20. Get a little bit of scale. And at that point, when you've got 10 or 20 assets, you've got enough good synergism working for you, especially if you're in maybe 2 or 3 markets, don't over spread out. Now you've got all those benefits coming in and it really works. I mean, there are people, you and I know, Robert Allen calls it the Robert Allen method, right? Buy either 1 or 2 homes for 10 years. That's all you need to do to build wealth. And gosh, I look at the country today with inflation, a little tangent, like people need to start building wealth, right? And so getting in through turnkey on just very modestly priced houses, it's a way people can build wealth. I was just talking to my nephews in his early 20s, and I'm showing him how he can go from a piece of dirt and get into his first single family turnkey. And then I said, I'll help you exchange that for 2 or 3 more. And he's like, really? I can do all that as a little piece of dirt? And I said, yes, you can. And doing those little steps is going to put you on a whole different financial path. Anyway, Allie, I'm off already on a tangent. What was your question for me again?
I don't know. It's like a bedtime story for me. I'm like, keep talking. I'm learning more. But one thing I will tack onto that, and if you guys haven't noticed, we're not even going on an outline here. We're really just having a conversation about, again, oftentimes the outlines pertain to the what's on paper type of thing. Here's reason number 1, number 2, number 3, the pros and cons of each strategy. You guys can read those anywhere. This is an open conversation of the reality of everything. But one thing I want to tack onto that's somewhat related, a lot of people, when they are considering going turnkey, it's harder to scale with turnkey for sure. If everything works out on paper, when you do the distressed property and you force the appreciation with the rehab and whatever, in theory, you're gaining equity that you can then snowball and roll into more properties. Cool when it all works out good. But one of the biggest things people come up with are, well, how do I scale with turnkeys? Yes, 100%. It's harder. But what I try and really drive home to people, and this is kind of in the ballpark of what you're talking about, is yes, on one hand, you don't want to jump from turnkey, one strategy to the next too quickly. But also people have a tendency to think that if they start with turnkey or they buy one turnkey property, that's it forever. That's not the case. Just like Scott said, you can use turnkey as an get yourself into the industry and allow yourself to learn the basics and the fundamentals that you can then carry forward to more advanced strategies. I'll link to a video below that I talk a lot about this, of why turnkeys can be really good for newbies. It doesn't have to be your permanent investing strategy forever, but it can be a phenomenal because turnkeys allow you to learn the basics, how to run numbers, how to identify risk and put risk mitigations on them, and how to do due diligence. If you can do those 3 things, which apply to any investment strategy, your investing will completely turn for the better. Though it's such basic things that most people skip over ever learning. So when you're not bogged down by doing advanced stuff like the rehabs and all that, you have time to learn those basics. So you do, even if you buy one turnkey, you're not pigeonholed into turnkey for the rest of your life. You can use it as a stepping stone to get better and do the more advanced stuff better. So if you buy one of those or 5 of those, Scott says 20 of those, like you're giving yourself a jumping off point versus being stuck. And I just want to clear that up for people who I don't know where that mindset came from, that, once you start, that's all you can ever do. That's not the case. I see people all the time starting with turnkey, and through the connections they made, or they end up partnering with other people, or they learn this or they learn that, and they branch off into different directions. So
yeah, can I
turnkey is a great
piggyback?
starting point.
Yeah, Ali, you had a great word you just shared there, just in the last sentence, was through the connections they make.
Yep.
So one thing, when you're working with a turnkey, a lot of times you develop a relationship with that provider where you buy from them and they want a good relationship. They want you happy to come back and buy other assets. I've got great relationships with different turnkey providers. I had one that came out to town from another state and took me and some other investors out to a game. We're friends, and one of the people, is a real big commercial person in town. So it became about relationships. So now I buy his assets. He'll actually call me up. Hey, Scott, I had something fall through. It's a really good deal because I've worked with you. I'll give it to you. So I'm not necessarily even paying full retail. I might get a little sweeter deal. Another turnkey provider in another state has become a good friend of mine. We're now friends and we interact. I was telling one of my goals this year was to get in better shape. He texted me over today, his personal fitness trainer, and said, hey, let me connect you. We're friends now. It's a business and personal friendship now.
Yeah.
It's more than just turnkey real estate. So don't discount the fact that you're dealing with somebody where if you get rapport and a level of trust and respect, you can do some things over and over. And now you've got a local friend in a foreign market that is going to have your best interest in mind. For the most part, you got to do your due diligence and all that, but there's some really cool things that can come out of that.
Yeah, and to that point, one of the turnkey providers I work with in Kansas City just let me know that he is now opening up the door to him partnering with people. So basically you and him partner together, and which is a huge incentive for him to perform, right? But also it changes the game, because turnkeys are not like you're kind of buying a product, but it's not like over the counter, someone sells you this product and then they're gone. In some cases that might be the case, but like Scott's saying, that rapport and that potential for partnering, if you partner with a turnkey provider, you're scratching their back, they're scratching your back, it becomes a bigger thing. So it's that there's just that mentality that people think that they're buying this one isolated house and the cash flow is not as high as if they did all the work themselves, and that's the end of it. And that's just not really the case. I think there's such a bigger possibility for expansion through the connections, through partnerships, through the profit centers. We talked about the numbers, and as we start to dive into your real world experiences, I'm curious to hear if you think your non-turnkey properties are going to be that much more profitable after 10 and 20 years. Because, we talked about them being a long-term thing. So if you save a little, you get things a little bit cheaper on the front end, maybe the cash flow is a little higher over the 10 and 20 year mark, how big of a difference does that really make after going through all of that? And we'll hit on that here in a bit. And so kind of what I want to do, because I feel like the most exciting thing about this video is going to be hearing, all right, Scott, let's dish. I want to grab my popcorn and my wine and be like, tell us all the stories. Because what I want people to hear is you've bought turnkeys and non-turnkeys. In hindsight, looking back on all of them, what are the pros, the cons, your experiences, what's your takeaway? And to open that, what I really want to do, just for people who might be newer to turnkeys, is just do a quick summary of the perceived, and in most cases, probably true, pros and cons. So turnkeys, we already talked about. The major benefits of those are you're really about as hands-off as you can be for a rental property. Yes, you've got to do due diligence. Please do due diligence. I can't beg people enough. You really want to do your due diligence, which obviously takes some work and some effort. but then you're just kind of signing on the dotted line, and you're really at that point managing the manager. So as far as rental properties go, you really are about as hands-off as you can be. And it allows you to buy in other markets. You know, one market may be more advantageous than another. You're not location dependent anymore. Huge benefits. Everyone's doing the day-to-day stuff on your behalf. I think there can be lower risk in that, on and on and on. The con being, you are going to pay a little bit more for that, and you're not going to be able to force appreciation as much as you would be able to with a BRRRR or a value add or a fix and flip and all that by doing all the work yourself. And so that does cut into your cash flow, and you are trusting other people to do this work for you. That ties back into the due diligence thing, that I am happy to teach you due diligence if you promise to do it, but you can verify what's going on. It's not completely out of your control, but that is some people argue that that's a downfall. With value add, the big advantage being that you end up supposedly paying less for the property, you do the rehab, and you force appreciation, which is one of the #1 preached tactics in rental property investing. Is you want to build that equity, because then you can take it and roll it into, you know, that's how you keep the ball going. And then the downside being that you're the one doing the work, you're the one taking on that risk. And so I think did I miss any completely obvious ones?
No, I think you got it. You know, I would say
super basic level.
Yeah, I would say if you were to break down, you know, one of the advantages of turnkey, I like to think of it as like McDonald's for real estate, right? That you're getting a pretty homogeneous product. You're getting something that's pretty predictable. So I kind of know when I work with turnkey providers what they do, right? Every house, when they show me when they're buying it wholesale, I know what it's going to look like when it's fixed up. I know in 3-4 weeks, I know what the floors are going to look like. I know the paint. I know the kitchen's going to look like. I get a product that I kind of know exactly what the end product is, and I like that. And so I like the predictability of that aspect of it. I think that's
such an important word. And you have some level of predictability with the properties. And in all fairness, I've bought from the same provider before, and over time the quality went down. That can happen, but that's where property inspections and all that come into play. Now I just lost my train of thought. The predictability. Oh, and then, so aside from the property condition, you know, if you come to me and say, hey, Allie, I really want to buy a turnkey, you know, who do you recommend or whatever? I can't give you a guarantee that nothing bad's going to happen. But at the point I tell you, hey, I really like this provider in Detroit or Kansas City or St. Louis, there's some level, again, of predictability where I personally am vouching for them. Again, that doesn't mean everything, but you know, you're stacking the odds in your favor. And in the way that I view it, I think Scott, you and I may have talked about this briefly, is the way that I view it is like, you know, ground zero is down here, but with a turnkey from a reliable provider, I feel like ground zero starts a little bit higher. And you want to verify all of these things, but for the most part, you can you're starting from an easier starting point versus if you go get some shack on the MLS, Godspeed, you know, like you don't know what's coming your way. So it's that more solid, predictable starting point, which is one of my favorite things about it.
I agree 100%. Plus, you got a house there that you know what it's going to rent for. You know what it looks like. Generally, it's going to be a little nicer. You know, it's once I do the turnkey, it's going to get a little better quality of tenant. Love having that. And I like the predictability of knowing somebody's done all the major fix up on it for a fair runway of time. I'm not going to have huge issues to deal with. And we'll kind of get into that because I did a couple of years ago, I branched off and did.
And this is where my wine comes out. Get the popcorn, kids.
Yeah, well, I don't know if it's
tails around a campfire.
I don't know if it's fun. Like you think of wine, that's fun. This is like, oh, don't do what he did. So, you know, I'd love to share with your audience, you know, like, hey, here's how I screwed up. You know, and here's what I learned. And if one person goes, Billy, I don't want to do that, then you know, we've succeeded. So I mean, if I've got a few battle wounds, some scars, and that's what I'll share. So
I say, tell us your story. Pretend we're all sitting around a campfire. We've got I keep saying alcohol. Can you tell there's a thing? You know, you got your beer in hand, your water in hand.
Let's go with the alcohol one. Let's go with the alcohol. So let me tell you one property I bought. A non-turnkey. I'm going to tell you a non-turnkey. Don't do this. So I'm going to tell you. So Allie said right away, a few times, she said, do your due diligence, right? Do that. Anybody who's experienced to say, do your due diligence, really do that. I once bought a property, non-turnkey. after a few glasses of red wine at evening. So this is the truth. So I'm just going to piggyback off of that. So I had some red wine and it just showed up and I'm like, oh, I want to be in real estate. I'll buy that asset. So I purchased a property, non-turnkey this way, literally said, I'll buy it. Paid all cash for it. What was the source of the
property? Was it MLS? Did you know somebody that had it? Like, where did it come from?
I'm almost embarrassed to tell you where it came from.
Don't give us specifics. Just say,
no,
like,
I'll give you,
generally.
it came from Facebook. Believe it or not, it was Facebook.
Oh,
it came up on a feed and I looked at it and I was in that mode. I was in that mode where I just wanted to buy real estate and I was hungry. And when I decided I want to get after something. So anyway, I bought this asset. I paid too much, first of all. So I paid too much money. It looked like a good deal to me. I paid too much. This asset this past year, it's up in Ohio. It's an older asset. It has a brick basement. And so long story short, I went with the original property manager who was horrible. I finally decided this year I had another manager in that market. I was going to move it over. I move it over. My manager does like the walkthrough and, the inspection and says, you have a big problem. We can't even manage this. This thing is about to collapse. So the basement was bowing in. The brick basement was bowing in. It needed a complete rebuild. We're talking $30,000 plus, no insurance help, right? So now I got an asset and I only paid 54 grand for this asset. So I'm like I'm 54 in. Do I just walk, kick the tenant out and lose it? So I ponied up. Because I think the market's good long-term, but that was not a lot of fun. And I happen to do that of all places when I'm on a vacation. I'm in Mexico with my kids swimming with whale sharks. And I get the phone call, like, we're bailing out. This thing is so dangerous. And I'm having to arrange everything from Mexico, trying to like have people do inspections, line up people in a busy market to come look at it. It was a disaster. And I'll tell you, that was a painful learning experience.
So 2 questions on that. Was it an individual seller who was advertising on Facebook, or who was selling? Was it from just a person who owned it, trying to get rid of it?
It was a seller that had different rentals in the marketplace.
Okay.
That was doing it, and the numbers kind of looked all right. I was like, oh, that looks pretty good, and I was in that mode, right? I was really in acquisition mode. Like I wanted to deploy all my assets into real estate, and so and it doesn't help. So the word of the wise: don't buy any real estate after having a few beverages. Don't do that. That's not a good thing. I'm gonna go on record and say that's a bad process. Don't do that one. All right.
Takes notes. And then my second question about this is, in all fairness, could that same problem have happened on a turnkey? I know my answer for that, but I want to hear your answer before I say anything.
In all fairness, anything's possible. So possible. Yes. I had an inspection done, but because it was a market I didn't know, I didn't have a relationship with an inspector. So I probably didn't get the best. That certainly wasn't caught. So my answer would be yes. What's your take on that?
My answer is 100% yes, because if people are watching this, they're gonna be like, well, that could happen on any property. 100%. It could absolutely happen on a turnkey. And I don't know if rebuttal is exactly the right word, but again, it ties back to what we were talking about with, taking some of the risk out and having an easier starting point. Because I think, and Scott, if you have a different thought on this or addition or whatever, I think the absolute most challenging thing with buying a turnkey, and this may be true for all strategies, but if we're just talking about turnkeys, I think the hardest part of the whole thing is due diligence, because we don't know what we don't know. And we don't know, we're all, we're willing to verify everything and check up on everything, but how do we know what to check up on? We don't learn these things in school. And so it wasn't until long after I bought my properties when I really started feeling like I had a good handle on due diligence. Why? Because I didn't learn certain things that I should have checked until they went wrong and cost me money. So, when it comes to buying turnkeys or any rental property for that matter, due diligence is absolutely key. Now, if you're an expert in due diligence and you know exactly how to check up on everything and exactly what to check up on, have at it. Go rogue, go on the MLS, go on Facebook, drink all the wine you want and buy properties, do whatever. But I think there are very, very few people out there who know how to do that good a due diligence. I feel really confident in my due diligence, but that doesn't mean that I wouldn't accidentally skip a foundation thing or whatever. And so assuming that we're all in a similar boat of, you know, we can hold our own in due diligence, maybe, but we're not that good at it. Again, it's that where's the risk level? And so with turnkeys, I feel like the chances of those things happening are less because the experts have already been on it, whatever. Does it mean it won't happen? No, not at all. But because again, that starting point is a little calmer and a little easier because my due diligence most likely isn't up to par. It's easier for me to get verification on those things. You know, if I get the shack, there's so many things going on that I'm kind of lost in what I'm doing, and I'm not exactly sure, you know, what I'm doing or how I'm doing it. So that's kind of my take is yes, a turnkey is honestly just as susceptible to that kind of foundation problem as any other property. But I think the chances of it are significantly less.
Yeah, I would say that. And, you know, sometimes depends upon your turnkey provider, but a lot of times the provider will do the turnkey, and a lot of them will have an associated property management arm.
Yeah.
If you have that situation, they've got an incentive to do a good job, right? Because they're going to manage it. So if they put together something that's got some problems, they're going to show up, they're going to have to deal with it. So that's one turnkey strategy, which is get somebody that does the turnkey, but it's also going to manage it on the back end.
Yeah, and just kind of a side note too, is there are varying levels of turnkey providers. Even if you work with one of the turnkey providers who has like the absolute best reputation in the industry, you should still do your due diligence just as thoroughly as if you were working with a terrible turnkey provider. Some of the worst turnkey horror stories I've ever heard, which for the record aren't a ton, there's not that many, but of the ones I've heard, a good at least 3/4 of them, I'd say 3/4 of them could have been avoided had the buyer done proper due diligence. The other quarter were just complete freak of nature. Nobody could have done anything to help, you know, it just that things happen.
Hey,
but
so
you know, 3/4 of it was buyer's due diligence.
So when you talk about due diligence, what do you like to do? What are your bullet points?
Ooh, now we're getting into the juice.
Because I think it's important. So I mean, I can give you a couple of mine real quick. Home inspection, but you want to have an experienced inspector. You want to do a sewer. You want to do a sewer inspection.
Hearing more and more of people not doing sewers and it causing problems.
Sewer and termite, but sewer inspection, super critical.
Just pay for it. Just pay for it. It's worth it.
$17,000 mistake. So I didn't do it. Cost me 17 grand. So so those are mine. What are yours?
Property inspection is huge, and not just the property inspection. I'll kind of give everyone a bonus, you know, secret insider's tip. When you get the property inspection, I'm pretty sure I have a video on this. I'm gonna go back through and I'm gonna link all sorts of videos down below. So I'll give you some tips on how to handle the turnkey property inspection, because there's a certain process that is really the easiest and most efficient to follow. But the big thing, a lot of people get really good at reading the property inspection and they'll properly ask the turnkey provider to fix things. Where I see so many people go wrong is they don't get verification of those repairs having been made prior to closing. And in some cases, the providers will be like, well, you know, the hot water heater's old. We're going to put a new one in time for closing. Like, don't worry, we're going to do it. I was about to wink, but that seems a little extra dramatic, but they say, yeah, we're going to do it. Don't wait until after closing to verify it and make sure it got done, because the minute that property closes, your turnkey provider has way better things to be doing. Their incentive is gone for whether they do it. They may do it or they may take forever to do it. But I've seen a lot of cases where people get stuck with an old HVAC or an old hot water heater because they kind of followed up on it from the inspection, but then they never confirmed. Like, I would be this stern about it. I am not signing the closing documents until I see verification of the year of that hot water heater. End of story, unless, you know, assuming it was bad in the report. So property inspection is huge, with the follow-up of making sure the repairs are done. The other big thing, property inspection gets people in trouble. The absolute biggest thing that gets people in trouble are the numbers. Even if you reach out to me and say, hey, I want a turnkey, and I'm like, oh man, I have this really good one, and I send you a pro forma. This actually just happened today, if this isn't the worst thing possible. I sent out a pro forma and someone wrote me back and said, oh man, I really like the look of that, but your numbers aren't adding up. The monthly property taxes don't equal the annual property taxes, and same for the insurance. And I thought, not possible. So I pulled it up and I was like, oh, like, I do this all the time. And I still make mistakes. I had two pro formas in front of me and I was trying to put all the information in and I goobered up which, the property taxes, and it dramatically affected the return. And here I am just shelling out these pro formas. It was an honest mistake. It was just really a typo. But whether the pro forma is from me or a turnkey provider or whoever, first of all, make sure the pro forma actually makes sense. And then second, make sure that the numbers are for real. So you can get an insurance quote. You can go to the tax assessor's website and confirm the current taxes. And for rents, huge, talk to the property manager. And there's a big difference here, whether you're buying a turnkey with tenants already in place versus not in place. If they're already in place, you still want to run those comps and talk to the manager about how feasible that rental amount is. But if they're not coming in with tenants, it's really important to do that, because if the pro forma says you're going to get $1,300 a month and suddenly you can only get 1,000 or 1,100, well, that makes a difference. And so going through each number line is critical. And some people kind of come back at that when I say that, and they're like, well, but I don't know how to do all those things. First of all, I have a due diligence document where I explain how to do all these things. So I'll link to that below also. But secondly, that's the point. Learn to do those things before you, if the problem is that you don't know how to verify all those things, hey, guess what? Great learning opportunity. Let's teach you. I want you to know these things, because I never, ever, ever want anyone to take my word for anything. If I say, hey, I really like this property, I even saw it in person, here's the numbers, cool, but I want you to buy it because you feel good about it. So the numbers play such a huge role. And like I said, I might have really screwed somebody over with this. I'm like, oh, and we probably would have caught it at some point, but don't ever just take numbers from a provider all willy-nilly. And again, it's not that they're doing it intentionally, but there can be miscommunications on numbers so easily.
Yeah. And sometimes they might round up right on the rents. They might show a little bit, and not that it's way off, but I think that's really key. Contact a property manager. Look, I like you to manage this. What's this property and this marketplace?
If not, contact 2 or 3 property managers.
Yeah, I do the same thing. I do that. And I love, by the way, how you have the inspection to verify it. So I'll just give you like a veteran tip. Sometimes people just send you, like I had one just recently, send me all these photos, just this, here's a file with all the photos. I'm like, no. I had a line item list to you, point ABC, 1, ABC, do this. I need you to match it up. So sometimes because they're lazy, or maybe they want something to slip through the cracks, they'll be like, here you go, here's the photo file. And I'm trying to go, well, I don't know what that is and what matches up. I've got an inspection report. I want to match it up item by item. You were right on the money. You don't want to close on the property, so you have proof. And what that does is it puts the heat on the provider to go back, get everything done right. So no, great points on I know that wasn't our main topic, but I think those are some good.
Give people nuggets. Something to think about. I'll give people kind of one more bonus due diligence thing, and I won't go into. I have a video on this too. I'm gonna have a whole pile of videos down below if I can even remember which ones to put down there. But one of the questions that I ask the property managers is, how is the rentability of this property? And I never hear people use this word, and to me, it's arguably the most important factor and quality about a rental property. When I say how rentable is it, how easy is it going to be to rent? What's the demand for the tenants? What kind of tenants are going to want this property? If people really want this property, my vacancy times are going to be less. What is the rentability? And the unfortunate reason I learned that was one of my turnkeys I bought, and this could go for any rental property, turnkey or not. It was the nicest turnkey that I bought in my mind. I was like, wow. I was like, what a great property. At that time, it turned out it was honestly too nice, because where it was located, and this was back when prices were pretty low, everybody in that neighborhood, it was far enough out of the city, anyone who wanted to live down there, prices were so cheap, they just bought houses. So the renter pool was next to nothing at that house. And I was like, seriously, the nicest property I own and I have no renters? I ended up getting a Section 8 tenant in it, which is crazy. And she's still there like 10, 11 years later, which that part's worked out okay. But the rentability of that house was terrible, despite the numbers were great. The house was great. It was beautiful. It was a newer construction house, the whole thing, but the rentability sucked. And chances are, if you ask the property manager, how's the rentability, they're gonna be like, the what? Like, it's just not a common word that's used, and I don't know why, but it doesn't give you technical information. But from a due diligence standpoint, I almost don't care about technical information. As long as I know my property is in high demand and I'm going to have people constantly wanting my property, That says something good. That's all I know.
Well, hey,
It's a
I
big
learned a new
question.
word. I learned a new word, rentability.
Rentability.
I don't think I've ever
Rentability.
thought, I think what you're saying is right on the money. I think that's, it's an intangible, but everybody kind of
Yep.
knows it. And if you're working with somebody, that's a great, so that's a big nugget there. So,
Yeah.
you know,
Yeah.
you should link to the rentability by Allie.
I should have been taking notes about all these videos I keep promising. I'm gonna have to sit and watch a whole video to remember what to link to. Okay, so let's get into the exciting stuff. So what I want to do is have you, so you can talk as much about your portfolio as you want to. If you want to share how many assets you have, or when did you start buying, how long have you had all those things. But getting into the big picture hindsight, you're like, okay, now I'm here. I have X number of properties. I went the turnkey route. I veered past and I went the non-turnkey route. Looking back on all of it, what is my takeaway? What are the good things that came from the non-turnkeys? What are the bad things? What are the good things from the turnkey? What's the difference in the experience between the turnkeys and the non-turnkeys? And going forward, what's your mindset based on all of that? Like, now we're getting into the real life experience of, turnkey versus non-turnkey. What can people expect?
Yeah, so let me kind of, give an overview there. I started off with a bunch of new construction years ago, and those are all right. They were more like A-class properties. They were easy, so if you buy new construction, it's almost like a turnkey with everything perfect because it's brand new. That's where I started. Then I got into turnkey, and I love the concept of turnkey. Once I understood it, I'm like, why was I not doing this sooner? So I jumped in and I got a bunch.
What part specific, you said once you understood it, what part specifically was it that you understood and it hooked you in?
What I liked about it was the continuity and the consistency that I could get an asset where all that major stuff was handled, taken care of. I really liked that. I didn't want to be remote managing assets, having to try and I don't need a second time job, right? I work full time. For me, investing is something I want to do passively on the side. For me, not everybody's in that boat, but I don't have enough bandwidth to work really hard and do things I like to do personally and have a second job of trying to manage all these things. So for me, having that all outsourced where somebody else did that, provided the asset, that was really appealing. I'm like, this is the best thing ever. To be
I want to quickly highlight something and let you keep going, but I want to pull out what you just said is you weren't looking for a second job. And this kind of goes back into I think value add properties and non-turnkeys are phenomenal for the people who they're phenomenal for. But the question is, any investor, there's two different kinds of investors. The people who are I don't want to say making a job out of this, but who have the time, ability, and interest to make this a more active full-time thing, versus there's a lot of people out there just wanting to invest, but they like their current job. They're not trying to make a career or even, quite frankly, a hobby out of real estate investing. And that's two very separate categories of people. And I feel like the people on Bigger Pockets who are screaming and bashing turnkeys, they're in the boat of they have the time and ability and they're making a living doing this to whatever degree, but it's just not applicable to everyone else. So I love that you mentioned that, is that when you got into real estate, you wanted to generate a lot of wealth doing it, but you're not looking for another job. You're not even really looking for a hobby kind of thing. And so just really clarifying that for people so they can think for themselves of which boat am I actually in, because it makes a big difference when you're picking a strategy.
Absolutely. And I think more people are in the boat of wanting to, something fairly passive on the side. Most people work a job, or even if you have a business, that consumes a lot of your time. So to think of I think that. So I got into the turnkey side. Now I will tell you, once I realized the turnkeys were turning over pretty quickly. I know a few years ago, everybody's like, oh, inventory is turning quickly. I remember one of the providers that I've now purchased quite a few assets with. I remember I called him on a Saturday and he's like, oh, that's not ready. I saw something on the website. I said, hey, I want to buy it. I didn't even know what the price was. I didn't know the rents. I'm like, I know, I've been looking at your assets. I like what you have. I like your market. I want to buy from you. And he's like, oh, it's not ready. He go, give me his first one. That was my foot in the door. I've now purchased a ton of real estate from that provider in that marketplace, and he managed it. In fact, he's my best management company. I've moved other assets over to him. So sometimes you got to be a little creative getting in the door. I knew that was a provider that I liked. I felt good about it. And so I fought hard to get in it. So I got a bunch of different turnkeys in different markets. I won't I probably over diversified. I have I think I'm in 10 different states now with, I think, 19
It's all
PMs.
tax returns.
Don't do that. So, let me just tell you, if I want to give you the shortcut to turnkey, start off in one market, expand to a second one, maybe a third. If you're in three markets, you're pretty good. Get a good provider in each one, 3 property managers. You don't need to make it any more complicated than that for 99%. So I did that. Things were working well, but I wanted to grow faster. And a friend of mine in another market had a pretty good sized portfolio. I think he had like 80 properties, and he was starting.
I'm already picturing, like, I can just picture this carrot dropping right in front of your face. Like the carrot gets dropped. Are you gonna follow
he drops the carrot in front of my face. And he's like, "Oh, I want to get a commercial, so I'm going to start selling them off." So he had picked up these assets at the last downturn. So like the, 07, 08, 09 is when he started buying these, and he would fix them up. And he had a whole bunch of these in a marketplace I was already in. So he approached me and he said, would you like to buy some? So the first time I bought one, and he sold it to me below market value. And I was like, oh, I'm getting an asset that he fixed up. It wasn't just fixed up like a turnkey. It was fixed up 10 years ago. But I'm like, he's a solid guy. It's in good shape. Had the inspection done. And then the next one would be like, hey, I'm selling 3 of these. I give you a little bit of price. Would you like to buy 3 at once? Well, hook, line, and sinker. I'm like, sucker. I'm like, yeah, I'll do that. And then that happened multiple times. I probably picked up 12 properties in this marketplace from the seller. And
did
so
they all have about 10-year-old rehabs, or what was the general condition of
10
everything?
to 12 rehabs.
Okay.
So they were, style wise, they were just a touch dated from today's standards, right? They were more the brown theme and the beiges, right? Where today it'd be the gray and white. So that I knew that, but I just assumed that he did a lot of work on it before they were in good shape. Well, that was a mistake. So turnkey, you get a property today fixed up, right? A 10 or 12-year-old property is in a completely different animal. So to your audience, keep that in mind. I'm sure when he first spruced them up, it was good, but things are already starting to go and sag, and there are problems. I would tell you, after buying that, and I continue to buy some other turnkeys. So I was continuing to add turnkeys. I'm at, mid 60s, 70s, some assets today. In the last year, those assets had a lot of problems, like
the non-turnkeys,
like all sorts of problems, flooded basements, right? Or like, redo the whole basement, gutting houses. I mean, I won't go into all the horror stories, but it was a mistake that I had to pony up the money to buy them, right? So I had the down payment, now I'm throwing a lot more money in. So instead of me being able to grow my portfolio, which is what I want to do, now I'm circling back to these non-turnkeys, and I'm putting in 20, 30, 40,000 on a few of these properties, significant money that I could have used to keep growing and scaling. So I'm frustrated. The tenants, when I'm fixing these, I have no tenants in there. I'm not getting any cash flow. I'm writing checks, out the wazoo, right? Left and right for stuff. I am like, this was the biggest single. So my biggest mistake was buying a whole bunch of non-turnkeys. Now, if you want to buy one, maybe that's got a little bit of risk, but because I bought a package of them and they were all in one market, all of those risks were now times 10. And almost all of the properties have had issues where I've got to address things with it. And so it's been a lot of work. I mean, where I dread when my property man, they dread calling me like, Scott, we hate calling you. We need another 12,000 contribution. And these are, we're not talking $500 or a little here and there. We're talking significant checks and outflows. So my experience with that was that if I had one off, I would have had it isolated to one asset. Now I had 10 plus. Now I had 10 of these that I'm fixing up. So today I've got them all in better shape. I think I've kind of updated them, upgraded them, knock on wood for the most part.
Are the numbers still good on them? Or
the recovery, if you look at what I put into them, my math sucks, honestly, Ali.
All the numbers suck.
Because I had to put in a lot of cash that how long is it going to take me to recover that additional investment? No, it took my returns and they went down in this particular area. Now,
well, before you keep going, I want to interrupt you really quick because I really want to highlight who we're talking to, who the most important person to be listening to this is. Because as you keep talking, I want people in a certain category of person to be aware that this is for you. And so, like, as I'm hearing, there are people out there who want to go burr the properties, do the value adds, like that is their actual strategy. So let's say that they had gone into that market and they found those 10 properties. They very well may have, depending on where the purchase prices were on them, they may have gone in and gotten those assets and be like, well, yeah, I know it needs such and such work. It needs this, this, and this. Here's that number. Okay, the numbers work out, and they go out and do that. That's one possibility of person who they are intentionally doing value add stuff. The people that I think really need to be listening to what you're saying, and all this information is good for everyone, but the specific category of person that I think can get the most out of what you're describing right now is the following. The person who knows that they're not trying to get a second job as real estate. They're not wanting to spend a lot of time. They're wanting, they really like to buy turnkey, but they're just like, I feel like I'd just be paying a little bit more. Like, seems like a little bit of a ripoff. Why don't I just go get this house off the MLS? This house off the MLS, it looks a little bit nicer. It might be on a little bit better street. The price is better. Like, yeah, I think that's the way to go. Like, duh. And they've definitely gone on Zillow and they're like, oh, the turnkey's definitely overpriced. So I'm going to get this MLS property or wherever they find it. That is the person I think who can benefit the most from this, because it's the person who, just like you weren't going in with a value add intention. You weren't trying to do that. If you were trying to do that, two things would have happened. A, you would have analyzed those properties very differently because you would have been looking at the potential rehab costs. It's like, well, the purchase price is $80,000. Okay, cool. There's a difference if you're buying that knowing you're about to put a big old rehab in it, because it's like, well, let me figure out my rehab costs. Okay, what's the thing actually worth? And you would have done your math differently, I'm assuming, versus if you're just buying it to hold a good asset. It's like $80,000. Okay, cool. Maybe, turnkey, it would have been 100, but like 80 sounds great. And then you don't do any work on it. That's the person who needs to be listening, because that's the difference of what we're really talking about here. Turnkey versus non-turnkey. If we want to call it turnkey versus MLS or turnkey versus some other source, because the value add people are a different category at this juncture of what we're talking about, because they go into it very differently. This is for the people really who are like, I could save 10 grand on the purchase price if I just go buy it from this agent. Cool, maybe, but
Right.
now we're talking, it's like, oh, Scott, how'd that work out for you?
Yeah, well, yeah, no, and you never know. I mean, everything's averages. You buy real estate,
Yep.
some things perform well, some don't. That was just my experience. But let me flip it around to the turnkey, because we're talking a lot about paying, a higher price or paying retail. My turnkeys, when I look at them, they have gone up in value a lot. I would say 40-50%. So even though I paid retail when I bought them, when I look at where they are in the market, they've gone up very well. They've performed well.
Have they gone up more than your non-turnkeys?
Yeah, I would say they have actually. I think they have. Now that some of them are a little better, some of them are in BB plus neighborhoods, so maybe they had a little more appreciation. But I found the turnkeys have actually appreciated very well. So let's say I came in, I paid retail, but I bought it here and today it's here. I'm happy. Yeah. So, I mean, the other thing, and I want to be careful that, people are watching this, I talk about money going, I mean, I probably put 200K in plus last year into stuff. So that's a big number, but let me give the flip side. So people that are looking at
on repairs specifically, you mean?
Repairs. Repairs.
Like things, that's a lot for repairs.
It's a lot. It was not a fun year. I had a friend, they're like, oh, you must be doing the snowball strategy. And I'm like, not this year. Like, maybe next year I'll do some snowball. But here's the positive side, that when I look at my portfolio and like how it's grown, I mean, it's doubled in value. And this isn't all on appreciation. Just if I look at the rents and all the different components, it's more than doubled. I mean, it's significant now.
Over what time frame too? Like when did you start growing your portfolio?
I probably started going hard 4 years ago. So
that's it. Okay.
Yeah, I mean, I had a few assets, but I started, really decided to scale. My plan before was just, off 10, pay them off and have them paid free and clear. And I decided at a certain point, like, hey, I want to grow and scale. I want to go a whole different route. And so, at this point, I'm kind of getting closer to my goal. My goal would be somewhere in that 75 to 100 assets is kind of where I like to be. And maybe at 100, I'll switch strategies. I have some ideas of things I'll go to, but I want to kind of just keep doing little baby base hits, right?
Yeah.
Little turnkey, another turnkey, add it on. I don't want to, I'm not after the shiny object, what's in this year and what can I do? And, so-and-so made money over here in apartments or self-storage. I'm just staying the course, steady Eddie. So
I love the analogy of the base hits because, so many of the strategies that are pitched are the home runs or the grand slams or even the doubles and triples. And at the end of the day, it's the base hits when they're easier to get. And if you just keep consistently hitting them, you're going to keep scoring versus if you're constantly swinging for the grand slam, there's just so much that can go wrong and you end up not scoring like you think you might. I love the base hit analogy.
Yeah, no, and think about it. You get comfortable doing base hits, right? You've done this enough. I have where I can pretty much evaluate something really quickly and I go, hey, it's a decent investment. I'll go ahead and do
Before your wine.
Before my wine. Next time I was doing one of these, I'll have to pour a glass of wine. Anyway,
it would not be my first video with wine, I'll tell you that.
Yeah, what you do, everybody, is you enjoy the wine after when you made some good investments. And actually, there's a little tangent. I'll throw in a little freebie. One thing I'm going to recommend to everybody: celebrate your wins. Like if you set a goal to buy 5 properties, turnkeys, when you do 5. Celebrate. If you have a significant other, go out, even if money's tight, then to do a fancy steak shrimp dinner at home. But like one thing about real estate is you're taking your capital, you're investing it for the future. One of the things along the way to make it fun is celebrate it. I do trips. So my kids and I travel all over. I love travel. So I celebrate and I plan out when I hit a certain goal, I'm going to go here and do X. The kids are excited because they got to go along free and they got to go travel the world. So keep that in mind as you're buying assets and as you're investing. Make it a little fun. When you set a stretch goal and you hit it, take that point, make a marker, and celebrate and make it fun along the way. That's one thing.
I'll even jump in and say, you know what? Celebrate after your first turnkey because I think we hear so often like, oh, turnkeys aren't going to build your wealth and blah blah blah. It's a win. It is a win. It may not be the thing that gets you out of your corporate job or helps you retire immediately, but it's the base hits. That first turnkey, I don't care what people say, it's a big deal for 2 reasons. Number one, because a lot of people don't get that far. And 2, once you've done a turnkey once, it's really a lot easier after that because it's that first thing that you don't know what to expect. You don't know what due diligence items to look for. You don't know the process with the provider. You just don't know what's going on. But once you've been through it once, the process is the same all the time. So it's this huge milestone of you're in it. Like you did it. I can't tell you how many people I know, if not the majority of people I talk to, are stuck in analysis paralysis and they just can't get themselves over that first hump. So if you get that one turnkey, I would absolutely have fun and celebrate because everything's going to get easier after that, and then celebrate 5 and then celebrate whatever route you go with it. But I love that is let's not forget the fun and the true profit potential of all of this.
Yeah, no, great point. I love the first one, right? Getting that first step. So everybody take the first step. Sometimes you got to jump off the diving board and you got to go into the swimming pool. And so do that. And maybe that would kind of go full circle. The turnkey makes it easier to take that first step.
Yeah.
Maybe you start out with turnkey and you want to go a different route later on, but maybe this is a way to begin building your portfolio, buy a few turnkeys. And if after you get some experience and you go, hey, I think I'm ready to branch out to wholesaling or fix and flip or whatever it is, do it. But turnkeys may be an easy runway to kind of get some experience and buy assets that are going to be probably pretty good performing assets over time, and then cut your teeth on that. And then later on, if you want to go another direction, great. Or if you want to be like me and be a one-trick pony, stay with turnkeys and keep going.
A one-trick pony in 10 markets.
There you go.
A one-trick pony 10 times or 10 different variations. But also too, one of the biggest things, that analysis paralysis, and if you're in this boat of being fearful, the best way to gain your confidence is to go through that first one. And I see, aside from analysis paralysis, that's one thing that stops people. Overwhelm stops people. But a lot of people want more confidence. And, you know, I'll say like, make sure to do your due diligence, and they have no idea what I'm talking about. And that makes them fearful. And so when you get that first property, even if it ends up not being the most highly profitable property, maybe it's not even a great property, the things that property does for you and opens up for you in order to move forward is worth every penny of it. Now, I'm not saying go just jump into anything to buy a property and get started. Do the best that you can, but it really is this entryway into having confidence, to getting rid of a lot of that fear that holds you back. And then like Scott's talking about, it's the gateway into building that portfolio and figuring out which way do you want to branch? Who do you want to meet? Who are you going to partner with? What do you want to do now? It's all in that first property.
Absolutely. And think about it. You know, you talk about it doesn't maybe perform well. I would take a turnkey piece of real estate over having my money at the bank. Money at the bank right now, we know inflation's going to erode the purchasing power. I know if I buy an asset, I'm going to have real estate, I'm going to pick up some tax advantages. My money is going to pretty much stay even. It'll probably keep up with inflation. I know rents over time are going to tend to go up, you know, maybe not this year, but over time they're going to go up. I'm going to get all these tax advantages. So I would argue even a basic turnkey is probably a pretty good investment when I compare it to other things. You know, stock market, call it 8% return, give or take on average.
Yeah.
My property performs a lot more than 8%. My average turnkey is in that 20 to 30% return. So I'm getting 2 to 3. So you're going from single digit return to double digit return. Double digit returns is how people build wealth. You're never going to get wealthy doing a single digit return. In my
So
opinion.
let's pull this out, because I feel like people at this point, we've been talking long enough. People are starting to drift off. They're probably making dinner while they watch this. And all of a sudden their ear perks up and they're like, wait, what'd you say about double digit returns on a turnkey? Because again, we're all in this mindset of, oh, turnkeys aren't the highest returns or whatever. Looking back at your portfolio on the most high, broad picture level, what is your take on the returns of your turnkeys? And we could compare it to the non-turnkeys, but we kind of talked about those expenses and everything. But, you know, knowing that people's argument is, well, I'm not going to get as high a cash flow. I'm already paying retail. Okay, yeah, it might go up in value, but it's, you know, I wouldn't get as much as if I did it myself. They heard double-digit returns on a turnkey. What's your like 1 to 2 sentence highlight encouragement of turnkeys do not suck for returns? Here's why.
Yeah, on a turnkey,
I'm here to tell you.
Yeah, on a turnkey, based upon my experience over 60 some assets, you're going to get somewhere between a 20 to 30% return when you factor all of the variables, right? So the variables can be cash flow coming in, some cash flow. Number 2, some appreciation. Let's just say it's 3 or 4%. 3, rent bumps are going to go up. 4, you're going to get tax advantages, depreciation and other things. And 5, you're going to get kind of a secret sauce in today's market, which is debt debasement. The debt becomes less expensive over time. So when you add up all those variables, I'm getting 20 to 30% returns on single family turnkey houses. You can't get that on Wall Street at all.
I was about to say, name one other place that you can get 20 to 30% returns.
You can't. And even if you do, you get the roller coaster, right? You know, something zooms up and then it goes down. I don't care what the Fed does. I'm buying turnkey real estate. So here's the point. With turnkey real estate, you're going to make your own economy and make your own investments. You're not dependent on the Fed. You're not dependent on the stock market. You're taking control and ownership for your own finances, one asset at a time. And so the first one's the big one. And if you just have a few of those, you're miles ahead of almost everybody else in America, because you're building an asset base. We all know, if we just look at the home that you live in, your residence, that's the source of most people's wealth. Well, if you get 2, 3, 4 turnkeys, you've got double, triple, quadruple what you have in your home, and you have all of those things working for you. And you're going to be in much better financial shape, in my opinion. So turnkey.
So what if somebody is sitting out there listening to what you're saying and they're like, well, doesn't everything you're saying apply to any rental property? Like, wouldn't that also apply to non-turnkeys, and I could spend less on it and still get all those returns? What is your experience based on you having your non-turnkeys, and you alluded to it with the expenses and everything? What is your take on, if the turnkeys can get 20 to 30%, what's your look back on the non-turnkeys as to how they compare to the turnkeys on the longer term return?
For me, my non-turnkeys had a lower return because I had to put a lot more in the way of improvements and repairs into them. So
Yeah.
yes, you get some of those advantages. Turnkey is just an easy way to get in and to be able to it just means you've got some of the risk removed. Nothing's 100% removed, but you've got a lot of the boxes checked where now you're getting something that should have a little less risk and be in much better shape. So
Yeah.
it's like going, it's like stacking the card deck in your favor, right?
Yeah.
You got some cards and somebody just threw in, an ace and a king in your deck, right? And you don't know what the others are going to be, but you're already ahead of everybody else because you got a couple cards that are really good.
Yeah.
That's what turnkey gives you.
Yeah. I'm loving all of this, and I want to start wrapping it up just so we, people are probably trying to make dinner and do whatever they're wanting to do. And I want to wrap it up with just a kind of pulling out the idea, we've mentioned that you are in the ballpark 65 properties category, like your portfolio's 65, give or take a few, like mid 60s. So one thing I want to highlight about that, and then I want to have you speak to the highlight, is that a lot of times turnkeys are marketed to newer investors. We've talked a lot about why they're great for newer investors. The more advanced investors on bigger pockets all bash turnkeys. But I really want to highlight the fact that you are an extremely experienced investor. We're talking 65 properties, give or take. And not only that, you're a 1031 expert. You even your full-time job is related to investing. So you're not some kind of noob who's pitching turnkeys. You are an experienced investor who is saying, hey, turnkeys are really freaking working for me. Because I think that's what people don't hear. The most advanced investors that you hear talking tend to be the ones who are doing all the work themselves. It's their full-time job. It's how, they make a living doing real estate or whatever. So I really want to highlight that for people as a reminder of, hey, this isn't just some individual saying turnkeys are great. This is a very successful investor saying turnkeys can be phenomenal. And then what I'd like to have you speak to just quickly as we wrap this up is, someone out there may be like, well, I don't even have my first turnkey, or maybe I have one property, but I'm low man on the totem pole and this guy's got 65. So what he's saying about turnkey versus non-turnkey, does it apply to me? Like, does your experience with turnkey versus non-turnkey apply to the person with getting one property or two properties? Like, how do they compare to where you are?
Yeah, 100%. Everything I said applies to somebody who's a new investor because you get all the benefits of that, right? I just get the benefits with scale.
Yeah.
You get the benefit. You're starting off with your one or two, but you still get all the benefits. So absolutely, a new investor, if I were looking non-turnkey versus turnkey, 100%, I recommend turnkey. So I've done different things. That's my take on it. Now you've got to do your due diligence and all that, but turnkey, I think, it's the great entry point to get into it. If you want to run down the road and do a bunch of them, you can, but use that as an entry point. Now you're in the real estate game. Turnkeys, some people look at it as boring, right? You're just buying an asset.
Yeah.
I love boring investments.
I was going to say, I love boring for real estate.
I'm not a spring chicken. I'm in my 50s, right? So, I don't want exciting investments. I like boring and predictable passive cash flow. And my portfolio now has enough momentum that it's growing. And boring is great. So don't shy away. Boring will make you wealthy and rich.
I'll tell you what, anytime my properties have not been boring, I have been so epically miserable, because when they're not boring, it's not a fun, exciting that they're offering me. It is a hell on wheels. I want to commit myself to a padded room. Like, a lot of people have heard me say last summer, I just had this wave of, well, I guess maybe we all had waves of rental property drama last year. I found out one of my houses had been a brothel for a couple of years. There was a guy who had snuck his 4 pit bulls and his girlfriend in the house, and my property manager didn't want to manage anything with pit bulls, but there's a homeless encampment next to the property, so I didn't really want to get rid of him, my good tenant. It was a whole thing. And then I had this kitchen gut where the contractors literally made me a loony person. Like, I was not sleeping at night. It was so hectic. So when my properties are not boring, it's terrible. It's not the fun, excitement. I've always been an adrenaline junkie. I love adventure. Not in real estate. I'm good. I'm good with boring. Like, give me the boring stuff all day long. At best, the most excitement I'll have, I'll be like, oh, that property is actually really cute. Like, cute is the most exciting thing I want in a real estate deal. That's it. I want boring, because anything outside that boring bubble, no.
Well,
I'm
you
good.
heard it here. Allie wants cute. Scott wants profitable. I want passive cash flow.
Well,
Allie wants
assuming they're
cute.
all profitable, then they can be cute on top of that.
Okay.
Good,
All right.
good
Well, there you go.
clarification.
Okay.
Yes, please, nobody run out and just buy a property because it's cute. If it's profitable and then it's cute, bonus.
There you go. Perfect.
And I will say too, somebody could be saying, well, he bought 10 non-turnkeys and it was riskier. So like, but if I only buy one, kind of like you said earlier, if you only buy one, you might have some room to buffer. But also keep in mind, I think you did the non-turnkey route at the perfect time, because you bought a lot of performing assets. So by the time those didn't work out, all of those other properties were helping carry that loss. So,
Yeah, exactly.
a lot of people think that more properties is more risky. I think, assuming you halfway know what you're doing when you're buying, I think that the more properties you have, the less risky it is, because when something happens with one individual property, the others carry it forward. When I had this whole thing with the kitchen gut and the pit bulls and the brothel, I wasn't getting income on a lot of those properties, but I had other properties to help carry that weight. So very minimal, if anything, had to come out of my pocket. I don't remember what the numbers were, but I don't have to worry as much about what's coming out of my pocket. So always keep that in mind too, is that more properties can actually be more helpful than one property or two properties. And so, thinking of the 1 to 2 property investor versus there's differences, but it's also, I think I agree with you that if you're debating buying turnkey versus going and buying something on your own on the MLS, the risks are the same. And I think it drives home the point so huge that you are a very experienced investor and those properties got you. So like if they were able to snow you, not that they did it intentionally, but you were able to get snowed by these properties, what about the brand new investor? How are they going to fend off all of these possible risks? So again, it goes back to that starting point, I think, of just taking on less risk with a turnkey, giving yourself the chance to learn all those things properly, and then doing the little bit riskier stuff.
Yeah, absolutely. Think about it. Switch over to some besides real estate. Some people buy certified cars. You buy a used car, you get it all certified where somebody's gone through, checked it out. All the hoses are good. The belts are good. Same thing with real estate with turnkey. That's what you're getting, is something that's got a baseline level of quality to it versus the risk. And for me, I think that's just the way to do it. Yeah. And I think most investors will be better served by that. Doesn't apply to everybody, but the vast majority, that's the way to do it.
This is so exciting for me because I've spent so many years on Bigger Pockets, just hearing people bash turnkeys left and right. And I'm like, I have an experienced investor telling me turnkeys are awesome. I'm like, oh, I feel so valid. As I knocked my earphone out, I was like, oh, I feel so validated. Like, I'm not making this up. But it really is good to hear. And, again, people aren't talking about good things on turnkeys on the web, because it's why I say, like, you can't really find reviews about turnkeys, because my experience is that when people successfully get turnkeys and they are successful turnkey investors, they're not online talking about it because they've gone on with their lives. They're not trying to make a hobby or a career out of real estate. So they're not hanging out on Bigger Pockets anymore. And that's why it's hard to pin down turnkey buyers to get reviews from or referrals from or whatever, because they were never into real estate to make it their primary thing anyways. So once they figured out what they needed to figure out, they invested in properties. Now they've gone on back to their full-time job and their families and doing all the stuff that they wanted to be doing. And that's why, it's hard to find more information about turnkeys because there's just not that many people online talking about them.
Yeah, and Allie, we'll kind of get ready to close it out here, but that's where you fill a niche, right? You've got great expertise that you bring, and you talk about different aspects, you talk about markets. So, anybody's just looking to get into it, consume all of Allie's material, because she's got a lot of great material. I've been following her stuff, and she talks about different aspects, this and that, but dig in with somebody that specializes in that niche, study it, read everything, consume it all, and then go ahead and take action buy your first one. So you provide a great service, I think, in that niche. So you do a
Thanks.
wonderful job, and it's just great visiting with you. I always appreciate our chats together. It's always
I'm
always
like,
a good time.
I'm already thinking, I'm like, we got to close this out, but I'm like, I could literally keep talking about this for hours. I'm like, do people want a 4-hour video? Because I can do that. I'm like, did we say it? I'm like, we literally could keep talking. You know, it's such a,
Allie,
that's why I
like
call it the campfire talks.
Allie, with the theme of the thing, I'd like to keep going here, but I checked and it's 0-1:30 right now.
Ayo. It's 01:30. I like it. Well, we're going to wrap it up, and I'll give a quick pitch back for Scott too. If you are familiar with 1031 exchanges, or if you're thinking about selling a property and you want to save massive tax savings, 1031s on your radar, do not do that without contacting Scott. Scott is my only go-to for 1031s. I have no interest in working with anyone else on them. He's an absolute expert in his field. Like I said, I'm going to link, I started making my list of videos. I'm going to link to some videos that I've done with Scott previously. One is about 1031 exchanges, and we really brought it down to kind of beginner dummy level, so they're easier to understand. So Scott's information is going to be in the description. Make sure you reach out to him with any questions, any help with 1031s. Phenomenal resource. He's also on what's about to be Hipster's new website as a go-to contact. Like he's in my upper echelon of people to help. You know, I can't do 1031, so I bring in people like Scott to help with that when people need different things. So definitely hit up Scott if he can be of any help for you. And we'll certainly be doing more videos. And a couple of things for as we close this out. If you have any questions, comments, clarifications, please put them in the comments, because at least I'll respond, and I'll even bring Scott in for the responses as well. And we will make sure we get everything answered for you. So please don't be shy. Throw all your questions, comments, clarifications down there. And then I had something else I was going to say, but I think maybe that's it. But don't be shy. Reach out to any of us if we can ever be of assistance to you in any way. That's literally why we're doing these videos. You good, Scott? Do you want any last parting words as people are pondering turnkeys?
Nike, just do it. Do a turnkey.
There you go. Little check mark. All right, guys. See you next time.
See ya.